how are you looking at the real estate space? Again, the index is up over 1%, and we are at the helm of September, and this is going to be the most crucial month because we are going to be looking forward to Fed's rate cut announcements, and that would make way for even Indian Central Bank to look forward to a rate cut cycle going forward from here. How would you look at the real estate story build up?
So, Sakshi, again, I think the real estate cycle is in real earnest. The 6, 7 year cycle, we're probably in the fourth year, all of us have been speaking ad nausea. A large element in terms of the developers per se and the commentaries thereof have been very, very positive, and the numbers have been probably justifying that. But let us now assume that the last 2 years they are coming off a very, very heavy base. And therefore, the good times will continue. You are seeing launches still happening. The pre-launches are getting sold off in select key pockets, and that enthusiasm still might continue over the next couple of years. Obviously, the fence sitters, with rate cuts also expected in the Indian context, might take and grab that with both hands. We were just discussing a couple of days back with our US team. And our take was, if you leave aside 2001 and 2007, when the rate cut cycle was initiated, but those were different conditions. These conditions are not showing any liquidity stress per se, as global debt to GDP has moved up. But a large part of the mortgage market, even in the US, might even move higher in terms of more debt with interest cuts happening in the US. A similar story might play out in the Indian context as well. And therefore, numbers will keep on stacking up for developers as we speak. But the real estate ancillary space, Sakshi, again, I think looks a tad bit more attractive at this juncture. They have gone through their periodicity of pain the last couple of years, both in terms of inflation, in terms of their input costs, as well as volumes not picking up to the desired extent. But as new homes are getting constructed over the last 3, 4 years in the real estate cycle, as refurbishment happens in the existing homes, many more projects going in for redevelopment. I think this space is now very, very interestingly poised. The input costs have now remained stable. Volumes from management commentaries are indicating are showing signs of picking up. And as that volume pickup starts happening with better realizations, input costs remaining stable, operating performance improving, showing operating leverage, and therefore bottom line growth. Ancillary players within this space might be a little bit more attractive. So I think a little bit skewed towards the real estate ancillary space, Sakshi, compared to the developers at this stage.